Okay, everybody. It's about 8:45 Eastern. I'm chuckling to myself because I just got done shooting about 8 minutes of video on the complete wrong date. So my analysis just blew out the window. But I do want to recap the analysis a little bit here. Let me adjust one of my charts. Sunday, Monday. There we go. Okay, so if you remember in the weekly wrap, I was talking about the market gaining some support down here in this area. And really the market after, this is Friday, this is coming into Sunday, you can see that the pound really couldn't get back down into this area. And this is the phenomenon that I wanted to point out. You can see a bit of a triangle pattern forming here. This is the kind of compression that you want to look for. You don't want to assume that you know which way the market's going to break. It could break up, it could break to the downside, and since the overall short-term trend is down, you've got to be careful to not get biased too much to the downside, because as we can see here, the market can just as easily pop up. So you can see the market popped up out of this triangle pattern very nicely. It actually had the bulk of its move in the early morning hours of the European session. Right about 3 a.m. is when the market popped up and started running. Once it got into the New York session, it had already had a pretty good move for the day and was just basically trading sideways. So there wasn't a whole lot of action for us New York traders that were looking to monitor the market. For the overnight trade, this triangle pattern really did give, I think, an ideal entry, but it was difficult to trade because the market got so far into the triangle here. And these are the kind of trades that you've got to be careful of because you can't always trade on autopilot is what I'm getting at. Sometimes when you place your order up here and your order down there, the market will kind of trickle its way up, trigger your long trade, trickle back down, stop you out, and then trigger a short trade only to come back in and stop you out again. That's a pure symptom of lack of momentum. And that's why I say it can be difficult to trade these types of patterns where the market goes deep into the pinch here of the triangle pattern. But we did get a little bit of follow through today. Nothing going on really at all. We're seeing the beginnings of a pennant pattern here on the 60-minute, but again, we're late in the New York session. It's almost 9 o'clock at night, so we're early in the Japanese session, or the Asian session rather, pardon me. So there is an opportunity to trade long. Again, this is a trade where I would suggest monitoring a 2.0488 to the long side with the 35 pip stop. That's going to put you down near to the bottom of this level here. And then to the short side, we've got 2.0419 with a 35 pip stop. Again, that's going to put you close to the other side. If you wanted to be more conservative, then on either one, using a 40 pip stop. Again, this is something you're going to have to watch, especially to the upside, because you're coming into a resistance zone very near to the breakout. To the downside, you've got a little bit more room to run since support doesn't start coming in until about 300, so about 162 points to the downside.